NPS, that is National Pension Scheme. In this video, we are going to discuss about the account opening details, the type of plans, the investment options, and the tax benefits. Now let us understand what is a National Pension Scheme. It is a retirement planning product. It is under the jurisdiction of Pension Fund Regulatory and Development Authority. Now it has got two type of plans. Tier 1 is a pension plan and Tier 2 is an investment plan. Now the account can be opened by a citizen of India, whether resident or non-resident, between the age of 18 to 70 years. Let us understand how the account can be opened. Account can be opened online and offline. In the case of online, the account can be opened by applying through the website address mentioned in this slide. Your mobile number, Aadhaar number and PAN number must be linked to the NPS account. Upon completion of registration, the subscriber will receive a PRAN number, that is a 12-digit permanent retirement account number. The PRAN number can be used by the subscriber at any time to track his or her transactions online. In the case of offline method, you have to approach certain banks and post offices where you can fill the NPS subscriber form and submit your KYC documents like Aadhaar card, PAN card, etc. Now let us see the fund managers or the funds which manage the NPS account. The funds which manage the NPS account are called pension fund managers. They are Aditya Birla Sun Life Pension Plan, HDFC Pension, ICICI Prudential, Kotak Mahindra Pension, LIC Pension Fund, SBI Pension Fund, UTI Retirement Fund, Axis Asset Management, Tata Asset Management, and Max Life Insurance Fund. Now let us see about the plans. So as I had said earlier, there are two plans. One is Tier 1 and the other is Tier 2. The Tier 1 is a default or a compulsory plan and Tier 2 is a voluntary plan. In case of Tier 1, it is called a pension plan, and Tier 2, as I said earlier, it is an investment account and it is allowed only if Tier 1 account is active. So the minimum contribution per year in case of Tier 1 is rupees 1000 and in case of Tier 2 it is rupees 250. The maximum contribution per year, there is no limit in case of Tier 1 and Tier 2 both the accounts. Tax benefit, now this is which is very important. Tax benefit will be allowed only in Tier 1 account and there will be no tax benefits available in Tier 2. Now withdrawal in case of Tier 1, upon attainment of 60 years of age, 40% will be utilized for purchasing an annuity from the life insurance company and the balance 60% will be a lump sum withdrawal. Now, if the accumulated corpus is less than rupees 5 lakhs in case of Tier 1, the subscriber may opt for 100% lump sum withdrawal. The subscriber has an option to defer the lump sum withdrawal till the age of 75 years. The subscriber has an option to contribute up to 75 years of age. This option is required to be exercised up to 15 days prior to the completion of 60 years of age. This is all in the case of Tier 1. And in case of Tier 2, there is no time frame set, so withdrawal can be done anytime because it is an investment option and it is a voluntary option. Now let us see the partial withdrawal. In case of Tier 1, 25% of own contribution only can be withdrawn after at least 10 years. Then the maximum withdrawals is limited to 3. Let us understand about premature withdrawal. Premature exit. In the event of premature exit, that is before reaching the age of 60 years, at least 80% of the subscribers' accrued pension corpus must be used to purchase an annuity that provides a regular monthly income. If the total corpus is less than or equal to 2.5 lakhs, then the subscriber can opt for 100% lump sum withdrawal. And in the case of death of the subscriber, the entire accrued pension corpus, that is 100%, would be paid to the subscriber's nominee or the legal heir. Now we have learned about the type of plans. Now let us see about the investment options. Now the NPS has two approaches to invest the subscriber's money. One is active choice and one is auto choice. In case of active choice, the subscriber will have an option to actively decide his investments. So in case of active choice, now there are four categories. That is asset class E, which is a high risk category, asset class C, which is a moderate risk, asset class G, which is a low risk category, and asset class A, that is a very high risk category. Now, in case of asset class E, that is a equity market instruments, maximum investment will be restricted to 50% of the total funds which are available at to the subscriber. That means only 50% of the funds will be allocated to equity market instruments. Asset class C will be fixed income instruments other than government securities, that is debt mutual funds or corporate bonds, which are moderately risky. In case of asset class G, low risk, that is government securities, and asset class A, that is alternative investment, a maximum investment up to 5% can be done in asset class A. Now if you go to see asset class E and asset class A has got a cap about the investments which can be done, whereas asset class C and asset class G, the subscriber can invest in these two as per his choice. NPS also offers an auto choice options for those subscribers who do not have the required knowledge to manage their NPS investments. So this option is generally decided by the pension fund managers who manage the NPS account of the subscriber. Now here there are aggressive life cycle fund, moderate life cycle fund and conservative life cycle fund. The subscriber has to give an option to the pension fund manager which life cycle fund he is going to invest in case of auto choice. In case of aggressive life cycle fund, the equity investment starts with 75% till the age of 35 years and gradually reduces as per the age of the subscriber. In the case of moderate life cycle fund, equity investment starts up to 50% till the age of 35 and it gradually reduces as per the age of the subscriber. And in the case of conservative life cycle fund, the equity investment starts at 25% till the age of 35 years and gradually it reduces as per the age of the subscriber. Now, if the subscriber does not opt for any option in this auto choice, but he exercises that he wants to go for auto choice option and not for active choice option, then the pension fund manager will uh, allocate his funds as per the moderate life cycle fund approach. Now let us discuss about the tax benefits of NPS. This is very important. Deduction will be available under section 80 CCD1, which is up to 10% of the basic salary plus DA, subject to the overall limit of rupees 1,50,000 which is provided under section 80C. In the case of non-salaried person, he can get a deduction up to 20% of his gross total income subject to the overall limit of 1,50,000 which is provided under section 80C. Now in case of NPS, an additional deduction of rupees 50,000 is allowed under section 80 CCD 1B. And if the employer also contributes to the NPS scheme, then a tax deduction up to 10% of the basic salary plus DA is eligible for deduction under section 80 CCD2. For example, if a person has a basic salary plus DA of rupees 1 lakh, then he will get an additional deduction of rupees 10,000. So in this case, an employee can get a deduction up to rupees 2,10,000, which is rupees 1,50,000 under section 80 CCD1, rupees 50,000 under section 80 CC D1B and rupees 10,000 under section 80 CCD 2. Let us see the tax benefits on withdrawal. After the age of 60 years, as I said, that 60% of the value or corpus can be withdrawn. So this withdrawal of 60% of the corpus is tax free. If any partial withdrawal is made, then it will also be tax free withdrawal. However, the balance 40% which will be received as annuity every month will be taxable as a part of the income of the subscriber. Now, one thing to be remembered is that these benefits which I have discussed in this slide as well as the previous slide will be available only for the Tier 1 accounts. So, these tax benefits are not available for Tier 2 accounts. Thank you. If you like the video, please click on the like button and subscribe to my YouTube channel.